Welcome back to InvestorHubX.com. In this video, we're going to explore the Bollinger Bands indicator. We'll cover what the Bollinger Band indicator is, how to access and set it up, and practical strategies for using Bollinger Bands in real market conditions. By the end of this video, you'll understand how Bollinger Bands help you read volatility, market structure, and price behavior without relying on prediction. Let's get started. So, what are Bollinger Bands? Bollinger Bands were created by John Bollinger, a technical analyst who wanted a better way to measure market volatility. Unlike many indicators, Bollinger Bands do not predict price. They react to volatility, expanding and contracting based on market conditions. Bollinger Bands are volatility tools, not buy-sell signals. Bollinger Bands consist of three lines. The middle line is a moving average. The upper and lower bands expand when volatility increases and contract when volatility decreases. They are typically set at 2 standard deviations away from the moving average. From a statistical perspective, 2 standard deviations mean that around 95% of price action will fall within the upper and lower bands. When volatility is low, the bands contract because very little is happening in the market over the last 20 periods. When volatility increases, the bands expand to reflect stronger price movement. Now that we understand what Bollinger Bands are, let's take a look at how to apply Bollinger Bands on the chart. To do this, open TradingView and select an asset. For example, Bitcoin. Click on Indicators at the top of the chart and type BB in the search bar. Once you apply Bollinger Bands to the chart, you'll see 3 lines. The blue line is the 20-period moving average. The red line is the upper band, and the green line is the lower band. The upper and lower bands are set at 2 standard deviations away from the moving average. Now that we have Bollinger Bands on the chart, let's move on to how traders actually use this indicator. Now that we understand what Bollinger Bands are and how to apply them, let's talk about how traders actually use Bollinger Bands in real market conditions. In this lesson, we'll cover 3 practical Bollinger Band strategies. These are not predictive systems. They are frameworks that help us read volatility, momentum, and market structure. The first strategy is the Bollinger Band Mean Reversion setup. This setup is used mainly in sideways or range-bound markets, where price tends to oscillate between the upper and lower bands. This is chain link on the daily time frame. In a sideways market, when price approaches the upper band, it often behaves like dynamic resistance, where upward momentum slows and price may pull back. When price approaches the lower band, it often acts as dynamic support, where selling pressure weakens and price may bounce. Let's look at another example. This is Tesla on the daily time frame. Notice that the Bollinger Bands here are moving sideways, which tells us the market is range-bound. To improve the quality of this trade, we don't rely on Bollinger Bands alone. We pair them with key levels and price action. First, we identify a key level from a higher time frame. This level is important because it marks a reversal, where previous support has turned into resistance. When price comes back down into this area, it aligns with a lower Bollinger Band, creating an area of confluence. At this point, we look for price action confirmation. In this case, we see a hammer candle forming right at the key level, signaling rejection of lower prices. Finally, we draw a trend line to structure the entry. When price breaks above the trend line, it confirms the trend has changed. That is where the trade is entered. The second strategy is the Bollinger Band Volatility Expansion setup. This focuses on periods of low volatility, which are often followed by strong price movement as volatility expands. This is Bitcoin in daily time frame. Notice how the price is in an uptrend, followed by a period of low volatility with a squeezing or narrowing of the band. When the price breaks above the band, this tells you the uptrend will continue and you will look at a long entry. Similarly, in the opposite direction, notice how the price is in a downtrend, followed by a period of low volatility with a squeezing or narrowing of the band. When the price breaks below the band, this tells you the downtrend will continue, and you will look at a short entry. The third strategy is the Bollinger Band Momentum Exhaustion setup. This is the dollar-yen currency pair in daily time frame. First, we look for a Bollinger Band break, where price moves aggressively outside the band. This is then followed by a pullback back inside the band, which tells us that momentum may be slowing. Next, we look for divergence. If price makes a lower low while the RSI makes a higher low, this signals weakening downside momentum. When a Bollinger Band break is combined with RSI divergence, it suggests a high-quality potential reversal, not because price must reverse, but because momentum is losing strength. After identifying this setup, we wait for price action and trend change confirmation to time the entry. As always, the indicator highlights the opportunity, but price action confirms the trade. To summarize, we've learned what the Bollinger Band indicator is, how to set it up, and how to use it in real market conditions. We covered 3 key strategies: mean reversion, volatility expansion, and momentum exhaustion. If you found this lesson helpful, please give this video a thumb up. Subscribe to the channel and turn on notifications for future lessons. I will see you in the next video.